Hi there, welcome to the closing bell on the 28th of May. It's been a bit of a rally week this week. Last week I was chatting with you saying you can flip a coin. Markets are on the edge. They're either going to completely crack wide open, which is a very rare event, or they'd stage a bit of a short squeeze for a while. And it looks like that picture might be building up, that there may be some more upside. I think the story is of long-term downtrend for the next 6 months or so, with short squeezes along the way that can last for quite a while. They can last for weeks, even months. So it does sort of feel like we're on the edge of a bit of a rally, but you want to be pretty nimble trading it and not get too cocky, thinking that the low is in place. But the story of this week really is of US data coming out on the very soft side. So things are responding. We've had Target, Walmart, that's been all over the news. But there has been just leading indicators, the Philly Fed index, the New York Empire State index, all about, how is manufacturing going? It's slowing down quite rapidly. A lot of the data coming in below expectations. So there is that feeling that, the Fed's idea of scaring the market and creating those short-term rates that are flying higher is having an effect and is seeing a slowdown. And the rhetoric out of the Fed's minutes, maybe a bit less hawkish. But really, I don't think it's over yet. But this is what the market's responding to. The bonds are starting to rally a little bit, thinking that data's coming off. Maybe they don't need to raise rates so far before things slow down and inflation comes off. That's creating a bit of stability. If the rates aren't flying higher, stocks starting to find some sort of base. They're very oversold. So you've got a few people searching for bargains, and we're seeing a bit of upside. So that's sort of the story. Bigger picture, be wary, but shorter term, I'll just show you why the charts are saying that we could see a bit more upside. And also the battery metals, we are seeing some rallying there because Europe coming out saying that they want to stop new internal combustion engines from hitting the roads around 2035. So we are seeing a bit of buying there, even uranium. So those strong themes are still there and possibly in a spot where they look like they will turn back up from. So we'll have a look at those as well. And that's it. So let's start off with the 10-year bonds here. This is the one we keep looking at over and over. It's so important. This is a 10-year bond yield chart. And this is going back a decade. The main point is that this top of the range here around 3.25%, that's the line in the sand. And we've had a big sell-off in bonds. So that's why the yields have gone up. So when the yields are going up, that means the price of those bonds is going down. And you can see it got right to the edge of that spot where I said, well, above there, I'm wary. I think it could get really bad. But for now, with all of that data coming off, it looks like it's hit that resistance level and there's some buying coming into those bonds, which is seeing those yields fall. So last week, we did see the weekly sell pivot in those yields, saying that the yields could, on a weekly basis, be heading lower. But really, the way I'd be looking at this is, going from an overstretched situation to a balancing up period back towards the moving averages. But, that could take a while. And if data continues to disappoint as far as inflation, if inflation keeps heading up, perhaps yields are going to end up turning around and going back up. But for now, it's feeling that sense of we've hit a bit of an inflection point for the moment, where that panic selling is sort of slowing down a bit. And that's feeding into the US dollar. I said to you last week, we saw the weekly sell pivot in that US dollar. And I was saying that the US dollar would probably come off a bit more. And we've seen quite a sharp sell-off in that US dollar. Again, I'm looking at it from the point of view of major resistance, and we have broken through it, and just a false break, and then mean reversion. So not necessarily saying the US dollar is going to sink from here, just that it's a bit overstretched, a bit overbought, reached very strong resistance levels, weekly sell pivot last week. And so just looking for a mean reversion, and how far it goes, who knows. The 20-week moving average down at 100, probably lots of support for the US dollar down around there. And, you know, that has seen the Aussie dollar bouncing. This is the long-term Aussie dollar chart. And you can see that this old wave from 2018 to 2020, that's what I'm making the calculations of. We've got the sell zone there, which is where we've seen lots of resistance, and Aussie dollar selling off. Where did it sell off to? Pretty much exactly on that 50% midpoint of the whole range, the point of control. And that was down at 68.2 cents, and it got just down there. And now we're seeing a bit of a squeeze from there. So, you know, this is how markets move, constant false breaks in either direction, you know, sucking the bulls in. They all got it wrong. Then the bears start selling it down here, then they get it wrong too. And we see a retest of the midpoint of the range. But overall, the trend on that Aussie dollar does seem to be down. And the next wave down, you know, if it heads up, again, mean reversion. If the selling comes back in and we break below that low at 68 cents, that is quite bearish for, you know, quite a wave lower. And ultimately that Aussie dollar, if it breaks below 68 cents, it can head all the way down to that buy zone of the wave, which would be down near 62 cents. But that may be a few months away now. As I said, things seem to have let up a bit, that we're backing off from that sort of crisis situation. So just moving on to what I've seen out there that does look interesting though, and is still catching a bid, is those you know, battery metal stocks. We're seeing a bit of buying come back into nickel. I mean, it's had that crazy move, you'll remember from a while ago, but interesting to see whether nickel can find support around that old support around 24, 25 bucks and turn back up. But if you're looking at, you know, rare earths, they're looking very interesting indeed. If I look at the monthly chart of this rare earths, you'll see that we've got the long-term uptrend, which has been in place since around 2021. Nice strong uptrend, and you know, it's retesting that breakout level currently, and also creating a bit of a range. You'll see this, what I call the distribution. You've got a range set up, false breaks of either edge, and if prices are heading higher, it's buying the false break of the low in direction of trend. That is often good buying, and especially heading back above the 10-month exponential within that long-term uptrend. So, you know, rare earths looking like, you know, they could end up working their way higher from here. And if you look at the long-term picture on those rare earths, you'll see that they had fallen a hell of a long way over the last however many years, decade. So if it can really, you know, say that it has broken away from that old resistance, you know, could be heading a lot higher. Also with lithium, and I have, just to finish on the rare earths, I have noticed that the buying has been around in those rare earth stocks, you know, Arafura Resources, holding in there pretty well. Lithium as well, looking pretty interesting. If we just look at the weekly chart on this, and we're just looking at the strength of the trend, you know, I'm looking at the most recent wave higher, and just saying that's where the buying should come in, around that buy zone area of that wave. And so we're seeing that weekly buy pivot last week, So, that's not a bad spot for lithium to start picking back up from. And you're getting a bit wary if lithium heads below the low of that whole wave. So, it's down around that sort of $55 level on this ETF. This is a lithium battery and tech ETF. Down below 55, I'd be wary. But yeah, looking pretty interesting for short-term buying coming up. Also, even uranium looking pretty interesting. If we're looking at the way that is traded over the past year, we do have a nice trend starting to develop here. I think the long-term trend is up. And so if we're looking at this most recent wave, and I'm looking at the way it's been trading, I'm looking at that buy zone as opportunity, looking at the sell zone where the selling pressure can come in. So it is sort of respecting that at the moment. And this is another move down into the buy zone of that wave. So if it can turn back up from here, back to the point of control for starters, and, could be the beginning of the next wave in that longer term uptrend. So uranium looking pretty good. Really all of those with the long-term structural bullish theme, they are still looking okay on the charts. So that's probably enough. I'll just finish off on the S&P 500, just to give you a sense on this weekly. The way I'm looking at this is, I still think ultimately this thing's heading down. If I was to, look at a downtrend similar to that, I'd be looking at this as having some sort of rally potentially, but then going for the next wave down, and who knows how these things play out. But, something along those lines is possible. And really the starting gun for this squeeze is a weekly buy pivot. So if we get a weekly close above the high of last week's range, which is around 40.95, so 4,100, above 4,100 on a weekly closing basis, for me would be the point where I'm saying, okay, the short squeeze is on. And, you can see the old low there around 41.01. That was the low of the correction up till a few weeks ago. So that 4,100 level is important, and it may not get above there. This is why you have those levels in there to give you a sense of when things are shifting. So if it doesn't get above there, we don't get the weekly buy pivot, I'm still thinking this thing is looking terrible. But yeah, the weekly buy pivot, and all of a sudden you could be in for a mean reversion move up to wherever resistance might be. But I'd be wary of getting too bullish on that short squeeze. And if you're overly leveraged a bit too long, you were scared on the last sell-off, you might use this rally as an opportunity to lighten up a bit. So that's enough for this week. I will come back with more next week. And definitely check out what I'm doing. Check out my pivot trader. And if you like the microcap stocks, check out the fat tail microcaps, and come and join me and do some trading. Right, cheers. I'll chat to you next week.